Is Bitcoin still preparing for a move toward the downside? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're having a fantastic day. We're going to be discussing Bitcoin on the smaller time frame and the macro charts today. We're talking about the recent price action, the likelihood Bitcoin will still correct here, the market data, traditional markets, and everything in between. If you like this kind of content, consider subscribing to the channel. We do daily technical analysis videos for Bitcoin and the broader markets. Also, show your support by hitting the comment button and obviously clicking like on the video. It does help boost it on the algorithm. You can also join our Telegram channel, which will be our second link down below. We have access to all our updates, videos, charts, analysis, information, and a whole range of more stuff. If you're interested in joining our VIP channel, where you'll get exclusive trades such as this one over here with exact entries, targets, and stop losses. You can find out more membership information here or view our trading track record. Let's go ahead and start off with the market data. So, currently, for the month, Bitcoin is looking at around 0.95% in the red. We're 9 days now into February. We haven't seen a lot of price action in the grand scheme of things, right? We've seen a few little percentage moves up, a few little percentage moves down, but all in all, we're very much consolidating now in our macro resistance range, which of course you would know by now is the distance between 22,600 and 24,300, represented by this red zone on the chart. We are very much still within that resistance range, and we are very much still struggling to break through it. And again, that adds to the bearish case. So we'll come back and discuss that. Looking at our volatility, we are starting to plateau at 2.44. Looking at our liquidations, they have come down about 8%, around 82 million. And of course, our volume is down 16% to 71 billion. A lot of liquidations occurred within the last 24 hours. We saw a lot of shorts liquidate. We even saw a lot of longs liquidate as the price moved toward the downside. Let's go ahead and talk about the broader markets and then jump into Bitcoin. So, DXY has seen a rally toward the upside. It actually came down and retested the support level we discussed in our prior video, and we have seen a small bounce from that level. Whether or not this bounce is going to continue upwards will be determined if we do break through its local high. The local high sitting around 103.8. Until then, if we don't break below, we can definitely continue downwards. Now, the trigger for a continuation downwards will be loss of the prior low. Okay, loss of its prior low sitting around 103. Again, losing that low could send the DXY back down to around 102.4, and that will result in a slight little rally in the cryptocurrency space and of course in the traditional markets. Moving upwards, of course, will be bearish for Bitcoin and bearish for all the stocks. Moving on, the S&P 500 and Dow Jones, guys. The Dow Jones is very much still in a symmetrical triangle formation. Again, breaking toward the upside will continue a rally upwards. We're looking for a target of 36,660. Moving toward the downside will be a daily close below the uptrending support. We're looking for targets of 33,000 and 32,000. Again, the directional continuation will be determined by the directional break. So the daily close candle break will in fact determine the direction that the S&P and Dow Jones will continue. In this instance, the Dow Jones will continue. Moving on to the S&P 500, you can see we are definitely pushing up and down between these resistance and support levels. You can see another retest occurred within the last 24 hours, only to get rejected once more. Again, guys, looking for a break, a daily candle above this resistance range here will send us upward to our next resistance, sitting at 4,300, which is going to be the trigger for a continuation upward. Losing this support level below us at 4,100 will result in a continuation downward to retest one of 2 points: the uptrending support line or the horizontal POC level. We're looking at around 39.70. Again, this is very, very relevant, guys, because if the stock markets do correct or come down, we are more likely to see that reflected in cryptocurrency and Bitcoin, as there is a strong degree of correlation, around a 70% degree of correlation. So they generally do move in the same direction, not always, but they generally do. Moving on to Bitcoin, guys, let's get into it. So Bitcoin, again, isn't looking amazing right now. We've been saying this for the last few weeks. We are not looking great. We have seen decrease in volume. We've seen decrease in bullish momentum. We've seen decreasing volatility as volatility is starting to plateau. And of course, while all of that is happening, the DXY has been pushing upwards and we are at macro resistance. But for the short term, guys, for a continuation downwards, we need to get points of validation. Currently, we have 4 points of validations we're looking for. 3 points have been met. Structural validation, we have in fact broken out of our structural rising wedge. Okay, we had a rising wedge structure over here. We broke out and downwards from our rising wedge. That's been very good. Structural confirmation number 2, we rejected above this midline of our resistance zone. If you remember back a few weeks ago, we were discussing how this current resistance zone is actually broken up into 2 components. We have our lower section of resistance and our upper section of resistance, with the lower end of resistance occupying a greater degree of resistance according to historical trading volume in comparison to the upper range of resistance. As you can see, currently we are rejected on that midline of this resistance zone and pushed toward the downside. So we have 2 points of structural confirmation. The next point of confirmation is of course our technical confirmation. Not only have we broken down from the 6-hour trend line on the 50 EMA, which again is signifying the trend is starting to flip downwards, but we have also lost the Gaussian channel, guys, on the 4-hour chart, and now as well as the midline on the 6-hour chart, again signifying a shift in that trend toward the downside. There is but one final bit of confirmation we need to see this continuation downwards actually play out, and that is going to be a loss of the 22,600 to 22,500 level. Do you see this little level between this red line and this red area here, this little white zone? This of course is going to be a liquidity zone. Losing or dropping below that level will confirm a continuation back down to 21,500 as our first target. If we do continue, we are looking for 20,800, 20,100, 19,500. So the short term, guys, is looking like we are heading down. There's no doubt about it. It's been looking like this for weeks now, okay? The short term is losing strength. Can Bitcoin continue upward here? It is technically still possible for Bitcoin to continue upwards here, as we do not have all of our points of confirmation met. If we do go ahead and draw this uptrending support line in, you can see we are actually still remaining above this uptrending support, and therefore a bounce could occur on this uptrending support. However, it is incredibly unlikely we see that. It's much more likely we've got rejected here. Our technicals are pointing down. We're in a major resistance zone. Structurally, we're at resistance. We are losing those structural support levels. Our technical indicators are suggesting, again, the trend is starting to flip toward the downside. And if we do lose this trend line here at the 22,600 level, we will most likely reject and continue quite aggressively toward the downside, and that rejection can take us quite low. Will it take us to a new low? It is unlikely. Again, look at the larger time frame. We are looking for these ranges here. Okay, 21,500-ish to 20,800. We're looking for ranges over here. This is going to be 19,600 to 19,000. Of course, there's a local high over here that we printed in December with a last level of support, 18,300. So on the macro chart, guys, it does look like it's coming down. On the short term, it does look like it's coming down. It's a matter of time. The longer we do consolidate in this zone, the more bullish it is going to get, in the sense that if we fail to reject from here, the RSI can reset, the volume can reset, liquidations can occur, the price can start rebuilding strength in the zone to actually continue upwards. If we do continue upwards, guys, we are looking for a break over 2 key points. 24,300 and 25,000. Those are 2 very important levels on the chart for a continuation upwards. If we manage to break above those levels, it's going to signify the macro trend is officially in a uptrend. Now, why is that? If we take a look at our larger time frame and bring up 2 specific indicators, we're looking at the 200-day moving average, okay, on the weekly chart. So we'll go ahead and plug that one in. The 200-day moving average on the weekly chart and a 50 EMA on the weekly chart. We can see that these levels actually line up exactly with the key levels we discussed on the chart just then, being 25,000 and 24,300. So looking at the 200-day moving average over here, you can see the 200-day moving average is sitting literally just at 25,000. So that horizontal resistance here actually is not only a horizontal resistance, but we have that 200-day moving average sitting over here on that weekly chart, which is going to be acting as a trigger or a confirmation that the uptrend has started on the macro chart. Because technically, guys, while we're underneath the 200-day moving average on the larger time frame, it still signifies overall weakness in the trend. So we do still have overall weakness in this entire downtrend. It is not quite flipped positive yet. We're not quite in a macro uptrend. Moving on to this chart over here, guys, on the monthly chart, you can see the 50 EMA is occupying the resistance at 24,300. And we do have a horizontal resistance at 24,300. So there's a whole heap of resistance above us. There's a whole heap of really important trigger points right above us that actually make this resistance not only stronger, but more significant. So if we do break through these levels, guys, this is going to turn into an incredibly strong base of support, and we will aggressively continue upwards to 28 to 30K. Although a break upwards here is very, very unlikely. It can happen, but it is incredibly unlikely. If we do break up, I'd be looking for a weekly candle close above 24,300 to confirm any sort of continuation upwards. Okay, a weekly candle close of 24,300. Let's go ahead and jump into a full technical analysis, and then we'll jump into the macro charts. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay, guys, let's go ahead and jump into our technical analysis for Bitcoin. And obviously, as we can see on the RSI here, we have an overall downtrend. So we have this overall downtrend on RSI signifying again our momentum is dropping, our speed and velocity of price action is starting to slow down. And again, while at resistance, this is always going to be an indication of a reversal. Along with that, we have a few bearish divergences riddled between the price action. A couple of these have already played out, such as this one over here where there's rising price action, obviously decreasing RSI, that ended up resulting in a bit of a drop toward the downside, and that has since played out. But overall right now, we do need to identify that the momentum is still falling on the Bitcoin chart, on the 4-hour chart. Moving on to Gaussian channel, we are actually officially breaking toward the downside on the Gaussian channel after a retest of the midline. We had this break towards the inside, we had a lot of weakness shown, push upwards, confirmation of rejection, most likely continuing downwards, going to be losing that low. So the shorts right now are much more favorable. It does look like Bitcoin is going to be continuing toward the downside on the shorter time frame. The Gaussian channel has actually turned red now, signifying that the strength of the trend has officially flipped downwards. So technically, we are right at the start right now of an official downtrend happening on the smaller time frame, which again is not always going to be a good sign. And as we said already, our market cipher is starting to show weakness on that 6-hour, on that 4-hour, the price action starting to crack down below it. So a couple indicators there showing us that we are starting to lose strength. And again, more importantly, that this downtrend is actually beginning, and the likelihood that we do push upwards is diminishing even more. And I say diminishing because again, we need that structural break. We need that confirmation of a breakdown below this level to actually get that continuation downwards. Until we get that, we have not confirmed the breakdown, therefore a breakdown will not 100% occur. There is still always a chance we don't break down, but according to the technicals, the probabilities that we do is like 85-90% that we do break down right now. It's incredibly high. Moving on to a larger time frame, guys, let's go ahead and bring up our VRPV. What we can see on the VRPV is we're starting to drop below our volume chunk again, moving from an area of higher support into an area of lower support. And you can see this area starts to drop down all the way until we reach around $22,000 again. $22,000 brings us down to around this area over here, this upper area of support, this area of resistance where we're most likely to push towards that next support level again, which is sitting between 21,100 and 21,500, represented by this upper neckline resistance in this consolidation zone we had here. So again, it is signifying if we do start to lose some of these lower levels, the price action is going to start picking up in speed, and we are going to see quite a quick drop. I'm not going to say a flash crash, but it's going to start to pick up. We are seeing consolidation. I think a consolidation now is coming to an end. We are going to start to see some sort of speed in our price action occur and some more volatility pick up in the market. And I do expect that we'll be targeting these support levels on the way down, as we mentioned prior, okay? Moving toward the downside if we do break down. So again, VRPV here, we are underneath this POC level over here. We are dropping towards the downside. You can see a valley in the VRPV, signifying a decrease in historical trading order placements over here. Again, this historical trading range is weaker and therefore likely and more easy to push through, considering we are in that similar trend. Since we're moving into a weaker range of resistance while we're pushing into that in a downtrend, which has been confirmed, it is more likely we actually continue through that range. So we're not now pushing against the trend, we're pushing with the trend into easy and weak support. So it's more likely we push through, guys. Looking at the market cipher B, we can see again, momentum is starting to decrease. Momentum has not yet quite flipped to a negative. Again, momentum will flip to a negative on the daily chart once we push through that 0 point on the histogram over here. Moving up to the RSI, we can see a very similar thing occurring here. Momentum is definitely starting to decrease. It has broken back below the 70 point on the histogram, indicating a shift from obviously being overbought, now triggering the entry order for a short, and now continuing toward the downside. So we are looking for a continuation downwards here on the RSI as well. Let's go to a 2 and 3 day chart and see how our momentum has shifted. Again, on the chart over here for market cipher B, we have not quite crossed that positive line for momentum yet. We are still very much in the negative momentum. It is very, very close. We can see we had decreasing momentum. So this is obviously negative momentum. Once we printed these green dots, it said we do overall have a downtrending momentum, but the downtrend is starting to weaken, okay, with this curvature signifying a weakness in the downtrend, but we have not yet quite crossed over into positive momentum. Again, no positive momentum here on the weekly chart, right at resistance. It is not looking too amazing for Bitcoin right now on the weekly chart. Moving on to the larger time frame, as we already discussed, we do have a variety of moving average resistances sitting right above us. Moving on from there, guys, let's go ahead and bring up some of those indicators on the larger time frame. The RSI you can see over here on the larger time frame, this is going to be the weekly chart. Looks like it has run into a bit of resistance, sitting at around 55.8, and we have it dropped down a little bit. Again, a continuation upwards. We will be looking for a trigger above that level, clearing over 58.88 level to continue back upwards. That should give us a positive momentum we need to push through these resistance levels. Until then, that is going to act as a trigger point. Looking at the MACD, guys, let's see some more momentum indicators. We have started to see weakness in momentum. On the weekly chart, we have now officially printed a light green candle, signifying that in comparison to the prior weekly candle, this weekly candle has less momentum, less bullish momentum. What does this tell us? It doesn't say we have bearish momentum, but it says we have less bullish momentum, and therefore momentum on the weekly chart is starting to fall at resistance. Again, not a very good sign, guys. I'm going to leave the video there. I hope you enjoyed the video. If you've got any questions, leave them down below, and of course, we'll see you guys tomorrow for the next one. Thanks for listening. Now, before we do actually go ahead and sign up for the Crypto Academy course. 10 units will teach you how to trade, will teach you everything you need to know to analyze charts, and obviously you can go ahead and contact us for more information at our email address right over here. Thanks, guys. See you tomorrow.